One more thing out of the many things that's going to add up to the gold and silver explosion that is coming. Ronan Manley says, as clarification, all of the good delivery, the high purity gold, was taken out of Fort Knox in 67 and 68, which would mean that there's only coin melt bars from the 1933 gold nationalization. And it was flown from the U.S. to England and convoyed down to the Bank of England bullion office in the city of London. And the gold bars were withdrawn to the market. So they were sold into the market. And this was part of the London gold pool, where they had a scheme to try and control the price. And a whole lot of the gold did come from the United States. So this was the real Fort Knox heist, not Goldfinger, but a bunch of wealthy European bankers. Who were they fronting for? I want to congratulate all of you hardworking people at the Federal Reserve. You guys have done a phenomenal job of destroying the U.S. dollar. This is the price of gold, going from roughly $35 an ounce up to $3,000 an ounce. This is the value of the U.S. dollar. How much gold can you buy with one of them? It used to be the dollar was worth 1/35th of an ounce of gold. Today it is worth 1/3000th of an ounce of gold. What kind of percentage change is that? Well, it's a fall in purchasing power of 99.31%. It is so that's how much value it has lost. The value remaining of the pre-Federal Reserve U.S. dollar is 0.689 or 0.7. So for each dollar, it is worth about 0.7 of a penny. It's just totally insane. So this is Reset Time 2030 says that gold for us Canadians, watching our incompetent governments destroy our currency for the past 20 years in one image. So it's a chart of gold. Gold is a mandatory own even at these prices. Still a long way to fall before our currency is worthless. So, bald guy money. Silver is already at an all-time high in other currencies like Aussie dollars. When the dollar index comes down, and it will come down, silver will make a new high in U.S. dollars well above $50. It's coming. So I want to thank Grady, I guess is how you say that, for this chart pointing out, pointing out this big bull that has been, I follow Clive Mond once in a while, and he's been pointing this out for a very long time. And the breakouts that have happened and the resistance points. And this is not we're up to where there's not a whole lot of resistance coming. And it's very, very old resistance. It isn't like there's a bunch of people that bought back in 2011 that are waiting to 2025 to go, I'm finally even, I'll get it. There's going to be a few. But still, that's 15 years ago. The people that are disappointed unloaded their positions at a loss. I just stuck with it. I was buying silver all through this and well before. In fact, in 2008 here, I pretty much doubled my position in silver. And then in 2020, during the COVID crash, I was able to add an enormous amount to my position. And so I've got a lot of silver between $11 and $13. Moving on. Nick Laird sent these great charts. This is gold quarterly. And what you see here is we've got a breakout that just happened. This is gold yearly. And, this is 1721. So 1776 is in here. So this goes back to the gold price basically in England and so on before the U.S. actually existed. This is just after the Civil War. It's a fascinating story and it's worth watching. There was actually a movie about some of this. I've got it on DVD. I haven't watched it yet, but I will. There was an attempt to corner the market on gold right after the Civil War. And so we've got a breakout again. And silver is continuing. You look at how the inventories are, so the flows are coming in. Here again is that beautiful cup and handle. And what we were pointing out, most analysts were pointing out that there was this cup and handle here. This is silver, and it's just setting up for an explosive move. But there are fundamental drivers underneath this that are quite exciting. So, King Kong 988 says that PSLV, that's the Sprott Silver Fund, physical silver inventory consists of 1,000-ounce bars. The COMEX has 1,000-ounce bars for their silver contracts. So it looks like by massively shorting PSLV, it's very likely that someone doesn't want PSLV to stand for delivery, because PSLV is a closed-end fund. When you buy a bunch of shares of PSLV, they then have to go out into the market and acquire the silver. So the price of PSLV sells at a premium and a discount to the net value of the silver that they're holding. There are some times where PSLV is severely undervalued. I would doubt that now is one of them, because there is sort of a rush back into gold and silver right now. I didn't look at it before making this video. There is a statement, I believe, on their website where you can see whether it's at a premium or at a discount. But when all of these people rush into silver and they buy PSLV shares, Sprott has to go and buy those 1,000-ounce bars on the open market. And so they go buy them from the commodities exchange. Well, if you short, you're borrowing a share from somebody that already owns it, and you're selling it to somebody else that's going to be buying. But Sprott doesn't have to go out and buy that ounce. And so by somebody doing massive shorting, it means that Sprott doesn't have, they're not supposed to go out and be buying these 1,000-ounce bars to cover that. So it looks like someone doesn't want PSLV to stand for delivery and withdraw these 1,000-ounce bars from the COMEX. So what does this look like? It looks like this. This is insane. All of this has to be purchased back. When they're buying back these shorts, it is upward pressure on price. The price has to go up when you've got more buyers than sellers, and these are people that sold something that does not belong to them. It's borrowed and it has to be returned. And so this is just one more thing out of the many things that's going to add up to the gold and silver explosion that is coming. Ronan Manley says, as clarification, all of the good delivery, the high purity gold, was taken out of Fort Knox in 67 and 68, which would mean that there's only coin melt bars from the 1933 gold nationalization. And it was flown from the U.S. to England and convoyed down to the Bank of England bullion office in the city of London. And the gold bars were withdrawn to the market. So they were sold into the market. And this was part of the London gold pool, where they had a scheme to try and control the price. And a whole lot of the gold did come from the United States. So this was the real Fort Knox heist, not Goldfinger, but a bunch of wealthy European bankers. Who were they fronting for? And then this shows you that there is an emergency going on right now.